Hi everyone, Jai Hind, Jai Bharat, Jai Mata Di. The question of the day is, sir, कि as a seafarer, if I make asset allocation or my portfolio, how much percentage should I invest in gold? And then when it comes to gold, how much should I invest in gold bars, gold bonds, or gold ETF? Sir, we would love to know your views on that.
Yes, that is one of the favorite topics which has been going on for few years. These are few developments which happen in the life of a country. Just 15-20 years ago, nobody used to talk about mutual funds. Then when they started talking, then they started talking only about debt funds or hybrid. Now we talk about full portfolio and allocation. So these are the movements that we do. Somehow everybody invests in gold, but not everybody on the video or in the print media or the social media, they want to speak so much and so well about gold. All the same, all financial advisors, they will say that you should have 5 to 10% of portfolio in gold. Now, as a seafarer, there is nothing special that you should not have or you should have. But because I understand the life stages of a fourth engineer, third engineer, second engineer, chief engineer, that how much money you should have in a separated form. So I personally feel that at an earlier stage, unless you have too much of investable fund, you can forego gold. You need not. Whatever money you have, please try to invest in your equity funds. Whatever surplus as debt you want to keep, please keep it in your NREFDs. That I find is a better proposition considering all the rules of taxation that are happening nowadays. Things are changing. Now, coming to gold, it is my personal preference that we take gold not only for diversification but also for its different tangible value. In tangibility, there are few things which come to our mind. Tangible means something which you can touch. So, a real estate, a house, a land can be considered a tangible. A car cannot be. In the similar category, gold comes. Nowadays, because of government's efforts, things have become little easier and sovereign gold bonds have been issued which get an interest of about 2.5%. Upon maturity after 8 years, there is no income tax, and whatever be the rate at that time, your money will be refunded at that rate, which is a good thing, and you can invest in that. And as people say, you have to be comfortable with that. You can't really go overboard and buy something you're worth full salary. Maintain less than 5% initially. Another case is of buying gold ETF. Now, ETF is exchange traded funds, which means you have to buy these on the stock market, which unfortunately, as a non resident, is very difficult to open because of various taxation rules. So, one can open it in the name of one's spouse or the family, the parent, and you can buy a gold ETF. Gold ETF, every unit is fully backed in gold and in India, not outside the country. Here, there it is earmarked, here it is actually backed. Means that much gold is purchased by the company and maintained in lockers elsewhere. All these you can do. There are mutual funds like Kotak Gold and everything which actually buy gold, and you can get your gold funds from that and you can buy from there. But in my definition, all these remain paper assets. It is only your mode of investment like debt, equity, real estate, it has shifted, and you can call it that I am invested in gold. But the actual advantage of gold remains behind. My personal preference has always been of physical gold in form of gold bars. Gold jewelry, which I used to give to my wife, and I still do that, does not count as investment, even though it is substantial. You have the opportunity of buying gold at various prices by when you visit a shore. I did start this thing in Bahrain, and so I would suggest that you buy. Keep your receipt. Coming back on the airport, please go to the customs and say, I am in possession of so much grams of gold, 20, 30, 40 grams, and you insist that I want to pay duty on this. There is nobody who can refuse duty and on the basis of this refuse to let it into the country. Keep your receipt and your custom duty with the particular gold bar in the lockers, and it is something which you can say that you have made a base. collected in various years, as it will collect, this gold will form a part of your physical and tangible asset. In a later video, we will also give you a insight into a SBI plan where you can actually keep this gold with SBI at a very small rate of interest, and in that case you will save the cost of a locker also, but that we will discuss later on. It is sufficient to say here that you can invest as per your comfort level in all these three assets. There are various arguments given in investing in physical gold, which I find very not so convincing. And I will also not really tell you that what are the advantages of investing in physical gold. You will discover themselves in later years of your life when you have to buy something. And you can ask your parents, but yes, you must at a later stage, I would say at a later than second officer or third engineer level, when you start having a little bit of disposable funds, it will make sense to buy into gold using all these four means of gold investments in India.
So sir, that was a great insight. Gold bars भी लेने हैं, receipt भी लेनी है, where you have custom receipt you have to take, invest in gold ETF wherever you can know. And sir has said before, I'll repeat again, gold is one currency which has been in the same form for the last 5,000 years
At least.
at least, whichever country you go, wherever you go. So I guess this is a great insight, sir. Thank you very much. Jai Mata Di.